Hey everyone, my name's Andy. I'm from the Finding Value Finance
Mm.
channel. I've got Andrew with us. We're here to get information from the younger generation. He's approximately a decade younger than I. So we were just talking over the phone a little while ago. We were just chatting about things, and he was asking all these different questions. Um, I ask questions back, or maybe give answers, or whatever. I said, "Well, why don't we just?" Well, he said, "Actually, why don't we just tape this?" So I'm like, all right, let's tape the discussion back and forth so everybody can hear what we talk about and get answers. Um, I'm going to ask you a question first before you ask the question to me.
All right.
Um, what is the obsession with millennials, or I should say, younger generation? I'll just say younger generation. It could be Gen Z, Gen Y, whatever it is, doesn't matter. Younger people. What's the obsession with this stupidity of investing in? I call it stupidity. That's my opinion. In Bed Bath and Beyond, in the what's that other
GameStop, AMC.
GameStop and AMC. Why are people obsessed with that? Like, I don't understand it.
Oh, that's funny. I wasn't expecting that question.
Well,
uh, that
it's
that goes.
so I look at it and I just think this is completely stupid. But so many people jumped on it. I don't know why. Is it because they want to all be a part of something? I don't know.
Yes, that's part of it, but it starts with okay, I think you got to look at the demographic as a whole, right? The millennials are for sure, and I'm just going off the cuff. That's a complex question, and I'm just going to try to dive in. Millennials are overwhelmingly left wing. Got it. So on that note, I guess you can say they're anti-capitalist. Okay, got it. And so am I to a certain degree, right? I agree with them on some aspects of that. But overall, they go, okay, um, you got these hedge fund guys that allow insider trading to a certain degree, right? They're the whales, so to speak. And so I think it was like 2 years ago, someone found out that GameStop had some huge short positions. And so all the millennials on Wall Street Bets on Reddit and other forums as well, investment forums, they all got together and was like, "Hey, if we just buy this thing up, it's going to we're going to cause these shorts to squeeze, and we're just going to blow it out of the water." And so that was fun to look at for about a month or 2 months, seeing it happen, seeing GameStop at the time rally from like $10 a stock to $300 a stock. And like I think Citadel, I think had to close their position and they announced a 2 billion. Some company, maybe it wasn't Citadel. So some huge hedge fund literally lost a lot of money from something like that too. So it was pretty entertaining, but I think it was just, this generation's version of Occupy Wall Street. Well, kind of the same generation, but Occupy Wall Street was probably closer to your age group in their late 20s, early 30s. And now my late 20s, early 30s, these people were all the GameStop. This is our way of taking down the billionaires who, we're going to, as a bunch of masses, we're going to collude anonymously over the internet and pump stocks and screw over the rich billionaires that are doing that with themselves because you need five billionaires to manipulate the market. You need five hedge fund or whatever, you only need a little bit. So in this case, they're like, let's take 5 million people and collude together and take down and do exactly what they do to us, but now we're doing it back to them. And I think that was happening somehow and so the way they were doing it was we got to find these companies that are going bankrupt because we know that all the big business people, all the hedge fund guys are going to be shorting those specific companies like Bed Bath and Beyond, AMC, especially AMC, a movie company or a movie
Movies, yeah.
theater company right in the middle of COVID. So of course you're going to short that company. And so they just started pumping those stocks because they're like, oh, all the hedge funds are going to be shorting these guys, so let's pump it. And that's kind of and to answer the original, that's the background. Now to answer that question, it's because they just hate billionaires and hedge fund managers. And I think millennials kind of have this, or most people have this idea that if I rally behind something and be a part of a movement, that helps motivate me to be part of it. And I never bought GameStop. I thought it was hilarious. I thought it was funny. I almost bought, but I was like, it's already at like $250. I don't think I'm going to do anything with it. And so I didn't do it. And I just wanted to see how it went. And sure enough, about 2 months later, it got controlled. I think even Robinhood got involved and now they're getting sued for some manipulation. They were like closing trading at a time and different things like that. But I think it's just people as a whole get fed up, and so then they rally behind some kind of a movement in which they are the minority being oppressed, right? Victim mentality, and then they go, okay, let's take down these people that we don't even know. I don't even think if there's a single person that bought GameStop that actually knew who they were affecting. It was just the boogeyman billionaire that they wanted to attack, and that's it. So
So,
I hope that answers the question.
well, I'm a millennial, barely.
Yeah.
So I'm the oldest millennial, basically. And I look at the younger millennials and I'm just like, the heck is going on with this group? Like, and they're in the same group as me. Like when I graduated college, what the majority of my age group cohort did is we went out, we just made money, became millionaires. We're all like millionaires at this age, 40 years old. Some have made $50-100 million that I went to college with, and we didn't care or even talked about this. Like we didn't collude to do anything. We just went out and did our own thing. What the younger group, like they are just lost. I don't know what happened. Maybe it seems like they don't know, they don't have that direction or anything. Like it's like guys, just go do your own thing. You don't have to complain about stuff. You can go just make it happen. I
Yeah.
don't know. I don't know. It just seems
Well,
like they've got a loser mentality. They
oh,
don't
that's
have the
true.
winner. A winner mentality is like, I'm just go get it done. Like I don't talk about it. I don't care about it. I'm gonna go save money. I'm gonna go invest. I'm gonna go work. I'm gonna do this. Here they're all complaining. Blah 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 blah. It's like go work. Shut up. I don't know. That's just my take on it. It's kind of annoying. They complain a bunch, and I think they have it pretty easy. So there's
Yeah,
no other time in history to start a business, make as much money as possible in the shortest period of time ever, and they're complaining.
I think you're absolutely right about that aspect. About there's no better time in history to do that, especially with the internet,
Yeah.
right?
We
I
you
think,
sit in a house with heat. I mean, like we're like all kings, and they're complaining about being a king. Like, what else do you want? You want to go work
so.
out? You want to go work outside doing an air hammer for half a
No,
day? In 30-degree weather or 20-degree weather, or maybe even at zero. You're going to be doing that. It's like none of these people want to work at all. So let's go short GameStop. That's going to solve our issues.
with the
I'm
last two
just
hundred
thinking.
dollars they have, last $200
Yeah.
they have in their bank account. No, I see the issue as it's relative happiness, right? And maybe, and I know you get Scott on your show a lot, and I think he
Mhm.
just made a second channel, especially addressing happiness and those kinds of things. But it's relative happiness where you look at the younger generation and they look at their grandparents, and I know we agree on this too. The boomers probably had it easier. That generation had it easier than any generation. But I don't become envious of that, right? I just look at it and I go, this is my environment. How can I behave in this environment to create the consequences I want in the future? This is the cards I was dealt. I was dealt the cards of a millennial, right? Just because it's a little bit harder for me, or maybe it's a lot harder. I don't know. It's harder for me than it was for a generation born in the 50s and 60s, post World War II generation. But that doesn't mean I can't succeed here. And I think the greatest motivation I've had about that is there's millionaires in almost every country. I'm half Mexican. If I was born in Mexico, I can become a millionaire there. They have tons of millionaires. You look at Argentina, half of the World Cup in Qatar were Argentinians. And Argentina is going through crazy inflation, a bad economy. How did so many of those people manage to travel to Qatar to go look at the World Cup? Because they're rich, presumably, right? Many of them are probably rich. And even in a country like there, they were able to do it. So then you have someone who's born in America today, where we probably have it, I would easily say we have it easier than an Argentinian to get wealthy. And they're still complaining because they're looking at it relatively to their parents and their grandparents, and they get a little envious, a little jealous, and now they're going to complain and moan when I appreciate those frustrations, but I recognize that being frustrated won't solve my problem. The only way to solve my problem is to work hard. That's it.
Yeah. Well, there's also a big divide, I think. I mean, the way that I see it is if you're really, really smart, you have it far easier today than you did when your grandparents or parents had it, because you have everything at your fingertips immediately.
Mhm.
So I think there's just a bigger divide where people who aren't as smart, we'll call it average IQ. I think it's a much harder to live with an average IQ today. If you're genius, you can become a billionaire before you're 30. It's you know what I'm saying? So
Yeah.
the opportunities are there, but we're being separated by, we'll call it the genetic lottery of IQ or something where like these guys that are, or girls that are incredibly smart just take away and go. It's like they can do whatever they want. It's limitless. But the average Joe is like, well, I can't do that. Like I played they're like, I played high school football, which is kind of like the peak of their life per se. And then they come out and they go work like an assembly job and they just get paid garbage. So yeah, I
Right.
agree with that perspective for sure.
And then they look at their grandfather who did the same thing that was able to buy a house at 24.
Yeah,
And so that's
exactly.
why they're frustrated. Yeah. So we
Exactly.
we
So
see it, we get it, but we just ignore it because it's not helping me.
right. So I think maybe perhaps I was in the group that was a little bit different where we just said we're gonna go. It's there's nothing gonna it's not gonna hold me back. I'm not gonna sit here and dwell on anything like that.
Mm-hmm.
Oh, did I just freeze up here?
Yeah, yeah. On my screen, you're frozen a little bit.
So hopefully it comes on back here.
Yeah.
Um,
Hmm. IQ topic. Well,
there we
hey,
go.
you mentioned becoming a billionaire
Mhm.
by 30. Just to joke with that, you can become a billionaire by 30 and then lose it all the very next day, like a certain Sam Bankman-Fried, which, by the way, complete tangent. Do you remember Martin Shkreli from like 8 years ago? He committed. He was called Pharma Bro. He was the pharmacist guy who founded a bunch of different. That's how he made his millions, and I think he became a hedge fund manager after that. If
Okay.
if you look up Martin Shkreli, you'll recognize the dude's face. But he got out of prison a couple years ago. He did like 6 or 8 years because of he defrauded his investors.
Hmm.
And by defrauding, he actually made them all money, but he lied about how he was making the money, so that's what allowed him to go to jail. And he was already a target by whatever. I'm not going to defend him, right? I'm just giving some background who he was. But anyways, he's out of jail now, and he did a video about since he just went through all this stuff. He did a breakdown of what Sam Bankman-Fried is facing. And I guess I didn't know this about attorneys and laws and judicial system, but when they sentence you, they actually follow a guideline. And it's almost like a checklist where it's like, if they did this, if they were guilty of this one, then add 2 points. If they were guilty of this one, add 4 points. If they were guilty of this one, add a half a point. And you go through these point systems, and then you take all those points and you apply it to the overarching like sentence, and then it recommends the amount of years they need to go to jail. And because of the scale, not just billions of dollars, but also internationally, and also what was funny, it was at the highest was 10 victims. This guy's got like a million victims. So you take this scale, and even in the most generous format, he's facing life in prison. Can
Hmm.
you believe that? Very
Yeah.
interesting video. If anyone
I
wants to
could.
find it, just look up Martin Shkreli says Sam Bankman-Fried is screwed. It's like 10 minutes long, and he goes through the judicial system. And like, yeah, he's facing 350 years in prison.
Mhm.
Minimum. Minimum. And even if he pleads guilty, they say they cut it in half. And so he's facing like 150 years.
Perfect.
Unbelievable. I'm like, whoa. I'm just looking at this like shocked by what could actually happen. But I think it's a bigger case than what people realize, and it's pretty interesting to see where it goes. And Canada just announced that they're banning lending in crypto
Mm,
as a result of that. Kind of a tangent, but yeah, um,
perfect.
it's still related to millennials, right? Because they were probably the main victims of the FTX collapse and
They're,
all that.
well, they're all they're very pro crypto. They think gold's a relic, and they think that gold's has no value, and that all the values in this digital made up asset. And I'm like, all right, we'll just see when you can't be typing on any silver how that's going to work out for you.
Well, hey,
um,
to go back to the millennial question, the part of the GME thing and the AMC and all that was there were still selfish motivations there, right? The idea was that if we short this, it'll go to thousands of dollars and we'll all get rich. And it was just they're always trying to find a way. Like, I can't buy Bitcoin; it's too late. So what's the next coin? What's the next stock? What's the next get rich quick scheme? I only have $5,000 to my name, and I'm blaming the government, and I'm going to blame capitalism and all that kind of stuff. So how can I turn 5K into 500K? And so some of them thought it was GameStop, and they're still believing it. Some still think it's Bitcoin. Most of the time, it's people finding some random alternative coin, and then they dump it, and they hope that it 100x's, 1,000x's in their lifetime, and then they can just that's their way of solving their issues. There you go, Andy. I just answered your question for you.
Let's play the lottery, fellas.
That's it.
Yeah, we don't want to actually work for it. We'll just we'll take a spin. We'll hit the buy button.
Which
So
would be more fun.
yeah. So you had some questions or something, or some things that you wanted to ask, and I
I
could
think,
maybe have some answers.
okay, so let's go with this. Purely
Mhm.
anecdotal. I have two coworkers in their 20s. One of them is closing on a house this month, and the other one is now looking to sell his current house and upgrade. And so now I'm wondering, right? 2 months ago, they would have never said that. And now all of a sudden they're doing that. So now I'm wondering, what do you think is happening with the housing market and just the economy as a whole? I have to caveat this by saying that I know our city is kind of an exception because we have a lot of people moving here. It's a high desirable city to move to. So we're kind of protected in a way from the overall market in terms of the housing market. But seeing those young guys almost like leverage themselves a little too much and still double down and go for this house.
So you asked about the housing market, and I think that the stimulus money coming into the system, which is very inflationary, pushed interest rates to a level that the housing market may not be sustainable at. So the inflation came in from stimulus, it pushed the interest rates way up. The interest rates went to a level where the housing market's like, I can't compete with this inflation rate
Mm.
slash interest rate. And it basically froze the real estate market for a while. It's stuck because what it did is it put the interest rates to a level that's unaffordable because the housing market may or may not have been driving it with all the stimulus money that came into the system. Does that make sense?
Yeah, and I guess another variable
So
too would
so
be if stocks were at their highest, people were selling stocks 2 years ago too for a down payment. That was the highest stock market's ever been, so they had a lot of down payment
well,
to their name.
I wouldn't say that because it's probably the boomers that hold the majority
Oh, okay, that's
of
fair.
stocks. But think of it this way: like the money came all in and it pushed the inflation rate. So the previous booms were paced by the housing market and the credit by the housing market. So if interest rates
Yeah,
got too high, the credit would pull back. So you get this like balance where
right.
interest rates were fighting the lending in the housing market. But stimulus came in and they just flooded the whole system. So the inflation came from stimulus all the way up, and then the interest rate chased the stimulus money. But the housing market's like, look, I can't sustain this interest rate. So I think we're going to have a disinflationary period back down to where the housing market kicks back on with lower interest rates at some point, possibly. But you could also say that the interest rates could continually go up higher as people get afraid of the government deficits at some point because the interest payments, the other payments with baby boomers, and everything associated with the baby boomers in terms of Social Security, Medicare, Medicaid, all that,
Yeah,
all the obligations there, that a continual deficit could be inflationary, and that with the interest payments, they snowball it, and then the snowball becomes an inflation that they can't stop. So they're going to have to do what usually happens. They do a bunch of QE, they hold interest rates down, and then the housing market takes off. So they're kind of in the government's in a spot where they're kind of screwed. If that, so if interest rates stay high for a long time, the interest payments start to snowball the entire debt thing. Like it just
yeah.
starts to snowball and get bigger and bigger and bigger. They can't stop it. So once you get past a certain level, I think we're already there to some. If we hold it here for a while, I think we're there. We're also running deficits with the baby boomer stuff. So as more and more people, as a large demographic comes into retirement age and they start paying out on Social Security, Medicare, all this stuff, you'll see them start to run a negative account balance. And we're already doing that. We're already in the negative. So when you run negative, you're like, what are you going to do? How are we going to cover this? Print the money. Screw it. Just print it.
Yep.
And then all of a sudden, they're like, it's a bigger number. Print it, print it, print it, print it, print it. And then all of a sudden, it starts ballooning. Then your interest payments, all your debt starts to roll over at a higher interest rate. Then your interest payments start to balloon. And then you're like, what do? Now you're in in a kind of a hyperinflation type of scenario where you just keep printing money because they can't stop. They literally cannot stop. Or they could just say, you know what, we're not going to pay out on this, which I don't think they're going to do. I think they're just going to inflate it away. So it snowballs. The debt gets bigger and bigger and bigger and bigger, and GDP can't generate the wealth to pay it off. So you get that mismatch between debt, the snowball of the debt, and the GDP, which is the final payment, so to speak, and the thing that kind of balances out the market. I don't think can grow that fast. And if you have a shortage in energy, it's going to get all sorts of ballistic.
Yeah. So then who? I mean, I've read tons of topics on how the Central Reserve works and how bonds work. I've read The Creature from Jekyll Island, and I still get so confused. Who exactly does the government they owe this money to? The Central Reserve, to the banks, back to the banks,
Federal Reserve banks.
Yes. But the Federal Reserve banks just, I mean, if your number one client is going to struggle to pay you, you're going to try to make it easier for them to pay you, and that's when you lower the interest rates.
Well, so the way they make the whole game work is, it's a balancing act of the gross domestic product and the ability to pay interest.
Yeah,
and then the Federal Reserve Bank gets to collect on everything,
which is made up of a bunch of private banks, right?
It's made up of private banks, and it's all it is they've got a blank checkbook. They release money from this blank checkbook, and then they collect interest on everything. So basically, it's a form of slavery. So it's like, you need my money because we've legislated or whatever. It's in our law to use this money, and I'm a private bank. I just sit here and write fake checks, or fake whatever, checks, currency, doesn't matter what it is. Here's some money, pay me back $1 plus one more dollar. And you're like, well, I only have $1 in the system. How do I pay the second dollar back? You're like, well, you're going to have to loan more money. And eventually, when all these loans go bust, I own everything. And you're like, well, what did you put up for collateral then? I put up nothing for collateral.
Yeah.
That's how so if you went into the system and you were to go and actually have a logical argument and go into the court system, and if it was a legit court system, they would rule against the banks. They would say that they're not putting up appropriate collateral for things in the real world. So if you look at the basis of the entire society and what it's built off of, in my opinion, is it's based off of a bunch of people who made it up from nothing. And then they put they put all these systems in place to regulate off something that is a known unethical thing. So it's a way to basically extract wealth from a system from doing nothing. So if you were to have a serious logical discussion about the 100% about the ethics of doing that, and you had 100% ethical people judging the system would implode, because what you would do is you could literally say that the banks didn't put up appropriate collateral for your house, and that the collateral dollars is not appropriate collateral. And then a system should be like, yeah, that's correct. You created this money from a blank checkbook. That is not appropriate collateral. Where did you get your appropriate collateral? Then they could go to the Constitution. It says appropriate collateral is gold and silver. And then the whole thing breaks down. There's people who've gone to court, tried to say that the banks did not put up appropriate collateral for their house when they gave a loan. They lost because the system cannot judge or could not rule in favor of that, because then that means that everybody get their house for free. Yep. But a honest and ethical argument, if you were to look at it, it is a true and honest argument. The judges based it off of the outcome, not based off of the merit of the argument. So you can be right, but you could still be wrong. So what one could conclude by based off that one thing is that the system is corrupt, and it doesn't actually measure anything, because that is probably the most ethical, logical argument that you could challenge in this court system. And they sided on the side of basically being bought out.
Do you remember the first time you learned that about how money printing actually works? Do you remember that moment?
It was so I've seen a bunch of different video clips. There's books on it. Mike Maloney was pretty big on it. There was one clip, I
How many
can't
years
remember
was
the
that?
name of it.
How many years ago?
2006 maybe, or
2006.
2005.
So you were in your 20s at that point.
Yeah, 24, 25.
Yeah, so I was 20, yeah, like 26, 27, I think. When I was reading some blog about some guys talking about how the credit collapse would happen or how anything like that would happen and how banks can just print money however they want, yada yada. And he goes, here's a good paper out of some university. I think it was Oxford, an economist out of Oxford that wrote like a 2-page paper on it, just like basically like here's a dummy version of understanding how central banks work. And I read that and it hit me. It's like, that's how it works?
Well, yeah, it's
What?
stupid.
Wait a second, you have $1 million in savings and you can lend 10 million? But
So
what's
that's the
the
commercial banking system.
yeah, the commercial side, but it's
Fractional
very
reserve lending.
very
Mhm.
similar, right? It's still very similar because you're printing money. That's commercial printing versus central bank printing,
Well,
right?
commercial, they just it's a bank entry. It's an entry in the books. And then the money's just
That's
printed.
it. And
That's
so
it.
the first time I learned that, like I still
And
remember the
that's
moment. I still remember how the paper looked, the article. I remember everything about that moment because to me it was like I'm 27 and I just now learned this. And I think, and I'm consider myself a smart guy who's really into the economy and understanding how all these things work. And so
Mhm.
imagine, I think 90% of the population has no idea how banks work. And
Agree.
I think that if everyone did, and I think that's where the end the Fed thing comes from Ron Paul or Rand Paul or whatever. That's why you have
Mhm.
silver ends the Fed with Wall Street silver. You have all this end the Feds kind of stuff, that language. But to go back to your point, I think it's because most people just don't know how it works. So it's like this weird, again, it's a creature from Jekyll Island that allows to exist because people don't know the creature exists.
Here it is. It is well enough that people of our nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Henry Ford.
Right. Yeah. See, there you go. My original thought, nothing's new under the sun, right? Henry Ford thought of that 100 years ago.
All these guys, all these
Mhm.
original people, they were fighting the banking system, and the banking
Yeah.
system was fighting them. It was basically the government, the United States government versus banks. And if you look back, even like if you were to look at Hitler and some of these other guys, the banks were fighting Hitler. So
Andrew
Hitler
Jackson
lost
was another
against the
one.
banks, and the banks made sure that no one would ever name their kid Adolf or have a little thing there again, because he was actually a very good leader in the beginning. He created, and I'm talking about leader. I'm not talking about it like the person
Ethics
himself.
or
Yeah, like
morality. Yeah. Let's let.
which may or I mean that could be debatable too. And I don't want to get into that.
Sure.
But
And I hope the audience is smart enough to recognize the point you're trying to make, right? Yeah.
yeah, so he created a system without a central bank, and it was like the best system that anyone's ever seen in terms of prosperity, technological innovation, growing like an economy. It was like the crap. It was the best thing that like was
Well,
ever
well,
developed. And
is
they
that what contributed to the recovery post hyperinflation in World War One? Is that kind of how that happened?
Yes, but they wanted to make sure that it didn't go kind of like all about, because the central banks wanted to remain control, and they wanted to have their hand on all of the wealth in the world. So he kind of like went against the banking system after that hyperinflation they had. He came into power, and then he just like killed it in terms of their economy, because he created his own currency.
Which,
Lincoln did the same thing. Abraham
huh.
Lincoln, and you saw what happened to him. Anybody who creates their own currency, you're done. Like they will come after you nonstop. They will put all the forces on you. They're going to get you into war, and they're going to go after you.
So,
They did that.
can I name some countries?
Like what?
Like Libya, Syria, Iraq, Iran, Venezuela. Oh, what happens to all those places? Weird, right?
Yeah, anybody who tries to transact either outside of dollars or outside of the central banking system, they're going to go after you. You're done. President Kennedy, he was creating a silver standard, and he was going to try to take us off of
Yeah.
a central bank, and that didn't last very long.
Nope.
So,
I think Andrew Jackson too. I think
yep, they tried to kill him.
and then
Tried.
I think he vetoed the central bank because the central bank came
He
after
got
him,
rid of
right?
him. He got rid of him. He got
Or he
rid of
got
him.
rid of it. Yeah,
He
that's
got rid of
right.
the central bank. Andrew Jackson did, and then they
Yeah.
tried to kill him like 4 or 5 times.
And then of course, 80 years later,
These,
that creature comes right back, and now it's existing.
yeah,
It's,
this
it's
is
hard to, and it's because people don't know. I think it's because people just don't know. Your average, but what's it matter, right? It's like a goat, right? It's hard to milk a goat, but if you feed the goat, then you can milk it. So
yeah.
you just got to distract the population with
So
TikTok, YouTube.
here's a couple of quotes by Andrew Jackson. He says the bold effort the present central bank had made to control the government are but premonitions of the fate that await the American people should they be deluded into the perpetuation of this institution or the establishment of like another. He says when you get in debt, you become a slave. Says I've had men watching you for a long time, and I'm convinced that you have used the funds of the bank to speculate in the breadstuffs of the country. When you won, you divided the profits amongst you, and when you lost, you charged it to the bank. You are the den of vipers and thieves. Like these guys, like they they did not want central banks in existence because all they
Yeah,
did was steal. That's all they did. And what I'm saying is, if you had an honest system that of an actual court system, they would have to rule against the banks because they are literally stealing. And you could do it through a philosophical argument or an argument based off of fractional reserve lending that they're not putting up appropriate capital, they're expanding it from nothing. So it's a pretty crazy system in my opinion. But anyway, I do think that the millennials still want to buy homes. I still think they're gonna. I know this is coming all the way back to your original question.
yeah. Well, we got to get the
They
background, the context.
they still want to buy homes. I think that they still there's the demographic supports higher home prices so long that the um, interest rates come back to a level that supports it. Right now, the interest rate is very high, and I think affordability is impacting everything because of the stimulus money that came into the system. If the stimulus money never came into the system, I think that we would have a normal business cycle. Did the stimulus money impact the business cycle? That's the question that I have, and I don't know the necessary answer. I think it's no. It
Can
doesn't.
you define business cycle?
So the business cycle is a cycle that we go through over and over and over. So it's connected from a recession. So we get in a recession, we go
Okay.
to recovery phase, expansionary phase, and then into a hyper supply phase, and then it starts over again and again and again. It's a cosine or sine wave depending where you start it, and it just cycles back and forth.
So you've heard it. It's also been called the boom bust cycle for the
Yes.
economy. Okay.
Yeah. So what happened is when liquidity enters the market, it basically puts people into what they think is an expansion phase. But this time, the stimulus money came into the system, and they're like, well, they're using all their metrics as the stimulus money kind of runs out of steam. And they're like, this is what happens when inflation goes down. We get crashes, we get this, we get that. The crashes are from a deleveraging in the system, but the stimulus money is not
Yeah.
causing a deleveraging in the system. It's a false signal, in my opinion. So all these guys that think the cycle of the business cycle is necessarily done, they may be wrong. And I don't know if they're right or wrong because this is what becomes difficult. When you raise the interest rate to a level that becomes unaffordable for everyone, house prices will fall. But the inflation that keeps that interest rate there will go away at some point. And the interest rate will have to come to a level where the housing market balances again. Now, how big is that bust? I don't know, because it's an artificial stimulus in the system. And when the interest rate goes back down to a level that is more sustainable, it's going to kick the housing market back on because you have a
Yeah.
demographic that wants to buy a bunch of homes.
The demand is still there. Like
It's all
that's
there.
my age group. That's your age group, right?
Yes.
Everyone I talk to still talks about it. All the young people I talk to that are fresh graduates, they're like, yeah, I'm staying at home so I can save up on a down payment. It's like
Everyone.
you're 22, 23. Their goal is to get a house before they turn 30. Like clearly, right? The demand is strong, is still strong. It's just that they're weaning, they're like, I'm going to take a step back. Let's see what happens in a year with this housing market. Is interest rates going to come down? Is prices going to fall further? Because all they do is they look at the monthly payment. They're going, that's too high for what I'm comfortable with today. I'm going to wait another year and see what happens. But the
But
demand is
that's
still there.
affordability. It's the
Yeah.
mortgage rate. And the interest rates, when they came up, the mortgage rates and interest rates came up, it's the stimulus money, and that stimulus money created an inflation that is higher than what the market would have normally created. So now we have to come back. We have to come back to a level that I think is more sustainable for the housing market. Then the housing market's going to be the generator of the loans. And when that comes on, we're still going to be in the same situation. That's where Powell is screwed, because his first stage is let's raise interest rates and hold inflation down, which is basically he's holding the housing market down. He's holding it down with one hand. And I'm like, that's great, Powell. You are raising rates and you're holding it down. What's the second act of your play? You're just going to hold it there? He's just going to hold this thing. He's going to be like, I'm going to hold the millennials from buying homes. Check this out. So he holds it on down, right? At a high interest rate. What happens to his debt? It starts rolling over at a real high interest rate. Then you've got all the payments from the baby boomers coming in. So he's
is that his problem?
Yeah, he's screwed because he either holds the housing market down with the high rates, or then he'll get screwed with when the debt rolls over if he does that for a couple of years because the payments go up. Now he's running massive deficits. He isn't, but the government is.
Okay,
he's running. They're running massive deficits, and they're like, print the money to cover the difference. Screw it. Which is inflationary.
So help me understand it, right? Because you're talking two entities here, I think, right? You got Powell with the Central Reserve, and all he cares about is inflation, I think, right? Now he's also got
unemployment and inflation.
Unemployment and inflation, right?
Yep.
So, but the people that are worried about the debt, is that the Treasury?
Well, they're not worried about it; they're creating it.
So then, whose problem is it that the government can't? So who's the leader, the cabinet member? It's not the president that's delegated to someone else.
It's just government in general. They're the ones determining how much to spend and all that stuff.
Okay, so he's gonna, but of course they're gonna pressure him because they're gonna be telling him. I mean, he's gonna be getting calls from Biden saying like, well, maybe Biden's puppet. They're gonna be getting calls from Biden's handler saying, hey, you can't be doing this. We can't sustain this. You need to tone it down. And probably from other world leaders too, because it's all kind of interconnected.
Correct.
Like, do you know anything about Japan? Whatever announcement came this morning?
I know
saw it late last night.
Higher interest rates. They're going to hold it at something higher, 0.5% or something.
Okay, people were trying to say that that's the coming collapse or the coming signal, right? That's the signal of what's to come. I don't know. I didn't really understand it because it seems like I've heard that 100 times in the past year and nothing really happens. But
yeah, so the way that I just look at it is I don't worry about it because I know that the end game is that these currencies have to fail.
Yeah.
The timing, I don't know. So why you would never save in a currency? You'd always save either in an asset or in physical metals or something like that, because then you just take it off the plate. You're like, I'm done. I don't want to speculate in this garbage. And then, making money in this type of environment in stocks is really hard. Because remember, they're gonna when you have a stock, you've got the currency going down, the stock can go up, and they're going to tax whatever delta you make on that stock too. So to outrun inflation is really difficult, especially if they are understating the real rate of inflation. So if the real rate of inflation is 10%, you have to beat the stock market has to beat inflation after taxes. But if they raise taxes on you, you're like, how do you beat this? You can't. It's like, just take your money off the table and put it in gold. And then at some point, the money's going to rotate back over into the metals, I think. So that's the way that I view it. It doesn't mean that I've got it all locked down. And I know Buffett wouldn't like that, but stocks have not performed that well. And, if you piecemeal your gold off or whatever, you could sell it for cash and kind of skip the whole whatever thing. I'm not saying that's not advice or anything like that, but if you had to sell some off and to pay bills or whatever, you don't have to necessarily, it's up to you to claim taxes on it. Right. But if you've got a system that's so corrupt, that's kind of the way that you save yourself from it to some extent.
And check your state laws too, I think.
Yeah.
Every state's different, isn't it?
And you can sell certain things like American Eagles, gold, whatever it is. You can do those types of activities depending on what the the stuff you're transacting is. So, I mean, that's the way I'm looking at it, at least.
Yeah. I'm just kind of like taking that step back and when it comes to the numbers and all those tertiary and then fourth degree consequences, that's why I always defer to you. I think what I'm good at is just kind of understanding the atmosphere of everyone around me and going, hey, that's an interesting behavior. That's an interesting thing this guy just said. I wonder if I can observe that in everyone else that I know in that age demographic. And what that has come down to, and it's the reason why I called you, was just like since interest rates came from when the 10-year, right? The 10-year kind of was at around 4.5, and then it crashed to 3.5. That's when it went down back down to that 3.5. That's when all this interest from these younger people came back online, and that's why they all locked in that low interest rate with their loan officer. And then what happens there? All of them were like, I need to find something now in that 60-day, 90-day window or whatever it is. So the guy that I know that's closing, I don't even think he's. I mean, I don't like the area he's in, but he literally had the mentality of, I need to get something now because I've got 90 days to do this with the interest rate that I have. And then I hear that, and then all of a sudden I hear another person going, yeah, we're thinking of upgrading because we just talked to a loan officer and we got this, low interest rate, 4.5, or no, it's higher than that. I think they're like at 5.5, 6. We managed to get 5.6 or whatever. And I'm like, oh, all right. And then I'm hearing that again. And then all of a sudden I'm putting these pieces together when 2-3 months ago, no one was talking about this. Nobody. Now all of a sudden it's hitting me all at once. And I don't think those are coincidences. I think it's just if you're observant of these things and you pay attention to it, you'll kind of understand the macro feel for things, even at the micro level, as long as you can discount the and understand where you're at, right? I know we're in we're in an environment, we're in a city where everyone wants to move to. So that does play a factor. But still, like, I pay attention to those things, I observe it, and then I give that feedback back to you and I'm like, hey, how does this apply to the macroeconomics that you're observing?
Yeah. So what I said is basically what you're seeing.
Yes.
The interest rates went to a level, it kind of like paused everything. As they come back down, it's going to turn it back on, and Powell's going to be like, just kidding, just kidding.
But he hasn't lowered anything, right?
No, he hasn't. But the market
so why
fluctuate.
People started buying bonds again. So he's upping it, but enough people started putting their cash back into bonds that it lowered the interest rate.
Maybe because it depends on who's doing it. I don't know who's doing it. It could be the commercial banks. It could be whatever.
Oh, like who's buying the bonds?
Yeah, it could be people front running where they think that the central bank's going to ease off, and people think that there could be a recession coming.
Yeah.
You've got a lot of people with a bunch of different viewpoints, all thinking, maybe I want to buy bonds because the recession's going to come. Generally speaking, when inflation slows down, that's from a hyper supply phase of a real estate market at the end of a business cycle that comes on down. Now, we still have low inventory levels. They're not at 12 months or 10 months.
Yeah.
That's not a hyper supply phase. We haven't been building the homes in relationship to the demographic. So what's the answer there? I don't know. What happens if rates don't go down? Do we get the inventory level at some point? Well, yes. And then the rates would come down, and then it kicks everything back on. So if it kicks everything back on, the business cycle continues. It's just a little blip. And I've been looking at other data to see if that data aligns with the beginning of an expansion phase, and it does.
Wait.
I'll release it here in a bit.
Okay, I was going to ask you to do it. So, so if that'll be a separate video, but
someone brought it up on the membership. It's about total bank credit in relationship to other assets.
So the inflation's hard to measure because we use CPI, and so we're not really measuring. We're looking at the consequence of inflation in a way, or we're looking at the price of goods. That's what the CPI is.
Yes.
But the problem is that the number one input for the price of things is energy. A lot of times that's oil and natural gas. And so we saw natural gas has been lower than what it was a year ago or 6 months ago. And we're also, is that right? I think it touched 10, maybe. 6 months ago. Okay. Because I think it's around 6.5, whatever the metric is. And we all know why oil's low. So I think the question I have now is, when the SPR is gone, now we have to tap into commercial inventory and they have to refuel the SPR, which by the way, just as a military guy, I'm constantly being told from military strategists that Russia is a threat and China is a threat, but we exhaust our SPR, which is used for military purposes. I guess they're not really that big of a threat anymore, right? It's just a bunch of international fear that you have to throw out there. It's a political fear. This alone is the reason why I don't think a war with China is happening anytime soon, because the government was able to release military oil into the system, which tells me they don't think a China conflict's happening anytime soon.
Well, maybe the conflict isn't military but financial, and the SPR
Yes,
release was a response to a financial attack.
yes, that might, that's a good way of phrasing it too. Or
Mhm.
actually, that's a good observation. That's probably true. But anyways, back to the other point. So when everyone's got to refuel the SPR and we're tapping into commercial inventory, there's a very real chance we might see the CPI come back up, but
Yep.
but that wouldn't necessarily mean there's monetary inflation in the system because we're not creating more credit and we're not um, printing more money or stimulus. So
So,
there's not yeah, monetary inflation, but the CPI is going up, right? Can we see that?
so, so historically, what paced the CPI was liquidity or monetary, things coming into the system, and it would outpace your um, response of your goods and services. So it was liquidity driven historically. What's coming up is supply driven problems. I don't know if the market's ever seen this to this extent. Does that make sense? So
Yes.
you could have money
Yeah.
in the system be flat, and if your supply goes like this, we've never seen that before.
I
So
think an example would be like computer chips a year ago. No, graphics cards about a year ago, where everyone was trying to build a crypto miner. And
mhm.
also all that stuff, there was a supply chain shortage. So you had all these graphics cards that used to cost $500, and now they're going for two thousand, $2,500. That's not inflation. That's just supply demand. But I guess that if what you're saying here is that CPI could go so crazy, but it's not inflation related. It's just the macro scale of everything has a supply chain shortage and also a supply and demand crunch that's causing those increased pricings.
Yeah, so what they would do is they measure the consumer price index, which is basically a measurement of commodity prices. That's really what it is. That they call it the producer price index, but the producer price index is just a leading indicator of the consumer price index to some
Mm.
to some extent, not completely, but to some extent. Um, but if you have massive commodity problems, which we've never run into before, on like let's just say 10, 12 different commodities all at once, and energy is one of the leading impacts.
Yeah.
The 1970s was that scenario where 1970 we had an oil problem in just America. And then what happened to our CPI? Boom. But we also had
Yes.
liquidity coming into the system as well. So it was that combination that had that large inflationary um, kind of problem. What is coming that I am speculating on is the same exact scenario as 1970 in America, but worldwide, which is going to be far
Okay.
worse because we can't
Mhm.
grow. Like America could grow into the world's reserves. The world can't grow out of the world's reserves. That makes sense.
Yeah.
So they're going to be like, "Hey, we're tapped. Like we don't have any more oil that we can produce. Crap." Well, what if now we this has not happened ever before, I don't think. But what if the entire world goes, we want more oil. We want 104, and the world says we'll give you 96,
And
and
what
that's
are
like
we at right now?
102, maybe 101.
Okay.
But what if the production goes down, but the world wants to go up? So the world wants to go from 102 to 106, and the world says we'll give you 98 or 96 or something, 98. There's this big gap. We've never had that before, ever. We've never exceeded the
Right.
pumping capacity. So our inventories, I think, will drop at some point, and then it's game on. You have to destroy demand through price. What price? I don't know. Because it's not going to stop at $150. It's not going to stop at 250. Because people are going to get scared. They're going to say, go stockpile that. Go buy everything you can. Then all of a sudden you
Oh
get a
yeah.
real shortage. And then it's like, how much are you going to pay for it? $10 a gallon? 15? I don't know. I don't know who gets it. I don't know what country is the last one to get it. Exports become thinner. That's where I don't know. I don't know what that looks like. We've never experienced it on a scale this large. But I mean, everyone else, they're like, well, we're going to have electric vehicles. Not if you have a scenario that I just described. Are you going to go run the largest mining boom in the entire world at low ore grades when everyone's going to be fighting after it? No. But then what happens is, if you get to that scenario where everybody's kind of hoarding it, it get like, people figure out like, oh my God, this stuff is really rare, so to speak, or it's going to get tough to get. They start hoarding it. That's going to happen in every single mineral that there is in the world for the large corporations. What do you think the response is going to be? Energy short, go hoard a bunch of minerals. Go get what we need. Go get contracts, go get inventory, go get whatever you want. Everyone's going to buy everything all at the same time. Potentially. Does that make sense?
It does make sense. So we might see if that happens, or when, actually it might be more accurate to say when that happens. We still might see a lot of language from people saying inflation, 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 right? But really, and then they're going to be looking at the government to fix that. But at the end of the day, that's not an inflation issue, right? That's going to be just a worldwide supply demand issue.
Yes, but they're screwed because they've got a bunch of people who they have to pay their obligations and they have to pay their Social Security. So the system, like, even though they can slow down the housing market, they're going to be stuck in this like debt loop over here. Because if you can't grow GDP, what I'm saying is your inputs are going to get stuck. GDP can't grow.
Oh, because the energy is so expensive, the GDP is going to slow down.
Not just energy though, it's everything, because
Or
aluminum,
commodities as a whole.
like they just don't have the mines out there to produce at a greater and greater rate infinitely at an exponential clip, right? So if you grow at 2 or 3%, that's exponential growth.
So
Does that make sense?
no, it does make sense. I'm just trying to think
There's
back, because what I wanted to say was this might be the first time we've experienced, I'm not thinking peak oil, but peak GDP. But
Yes.
but at the same time, can't we? I'm trying to think, rewind 2,000 years to the Roman Empire.
Their energy source went wrong. They diluted their currency and then they went bust.
And then that's why they invaded north to Germany. They needed more trees. They needed more lumber. They needed that energy because that trees were the energy at the time.
Mm-hmm.
So we've learned nothing from history, and we're going to make the same mistake.
Well, I mean, it depends on how we handle it. I don't know.
I think, you know what? I think if we want to look back, there's hope there, right? Because at the very least, it's not like people just died in masses during the time the Roman Empire just started falling apart. It's just more like the luxuries of what we can call today the luxuries of modern times. You had to throw those out. The super rich weren't able to buy a bunch of cars. Like if I were to equate, I don't know what luxuries were 2,000 years ago, but if I were to equate that today, what we would probably see is that, you can't buy new cars anymore. You got to buy, or if you do, they're like bone thin, right? All the luxuries of a modern car are gone, and now you just have a chassis, airbags, a seatbelt, and some wheels, and an engine.
I think it's going to be more like you're riding a bike. It's not going to be like a car.
That's not a bad thing, by the way. That might help the obesity issue we have in this country.
Well, it's going to help some people. The obese ones won't be doing it. It'll be their kids like riding to the grocery store.
Right? Yeah. Well, what grocery store? What? It's going to be. I think it's going to be local. It's going to be local markets.
We'll have food hubs. No, I don't think we're going to go that. I don't think we're going to have that.
That bad?
Won't be, not for a while.
Fingers crossed. Right. It's going to be a slow burn, just like the Roman Empire, right? There's a slow burn, slow. Yeah.
I mean, this may not happen for another decade. I don't know.
Yeah. And the consequences, the actual really bad consequences, might not be for 15 years, 20 years.
Yeah, or it could happen in 2 years. I don't know.
Yeah, you might not know what the peak. You won't know what the peak is until you look back.
Right.
We could be in it now. It could have been 2 years ago. I don't know.
Well, somebody said it was in 2018. So.
Hey, could have been.
Yep. But things will just get harder. It'll feel harder. Like life is just harder.
Yeah, we're gonna feel like we're living in a really bad novel or TV show from like a cyberpunk or sci-fi or future dystopian kind of story, and we're gonna be like, I don't like any of this.
Right. Right. So yeah, that's where my thoughts are at least. And I honestly, guys, I don't know if it's now. It could be 10, 20 years from now. But I do know that we are getting super tight in our world oil production demand supply.
It's hard for me to say that we won't experience this, or at least the very least our kids won't experience this. So I mean, for me, the strategy I see is how can I best position myself today? Because either I'll take care of myself in the future, or that will be the inheritance I give to my kids so they can take care of themselves. But either way, I mean, it's got to be coming. There's no way we can continue pumping for another the way we are forever. It's not
Mhm.
a forever game.
Yeah, I think it's going to be sooner than what you. It's it's happening in our lifetime. It'll probably happen in this decade, and it could happen within the next few years.
Right.
That's what I think. But we'll see if the investment and if the price kicks way up, what happens. Because I think we'll see it multiple times where the price kicks up, we get a supply response, it comes back down, we get another kick up, and it'll kind of go back and forth at the top like this for some years.
It'll probably follow some chart pattern, right?
Yeah, it'll be like a quadruple top, which I don't even know if there's one that exists that way. But
Well, I'm glad we can give your audience an optimistic outlook on life towards the end of this video.
yeah, just work out.
Work out. Yeah. Stock up, learn how to cut a tree down. Buy a fireplace, a wood burning stove.
Yeah, that'll last for like, half of 1 year after natural gas goes away, because then everyone else and their mom's gonna be cutting down every tree they could see.
Oh, that's right. I'm gonna have to move out west.
Yeah, all the trees will be cut down then.
So when we look east, there's no trees. When we look west,
I
there's
know.
so much tree.
Yeah. So I mean, what else do you have to talk about?
Oh,
Else
I
you got?
think for this, that's pretty much it. I think that might be a good stopping point.
Okay. Yeah, that's all I've got. I don't have anything else. So, all right. Well,
What about like a midweek update here or something? What do you think? Any good picks or precious metals or what? Or is it just wait and see? Need strength to
I
rebound.
I like all the commodities right now. I like uranium. I like oil and gas. I like energy service companies. I like them all. They're all down. I like precious metals. They're looking they're looking very strong. I like all of them. There's nothing where I'm like, man, this looks really really weak outside of maybe lithium, which I'm not really in. So rare earths are looking, yeah. There's some good spots within rare earths, but yeah, I
Is
think
that
everything.
is REMX a good way to measure all the rare earths?
Yeah, I would say so. They track sometimes the overall market a little bit closer than some other.
Oh, I see. Yeah,
Same with lithium.
I see it.
The overall markets don't look, they look okay, but they don't look amazing.
Gotcha.
It's nothing I would buy.
All
So
right. Cool. Appreciate
yeah,
that.
well, yeah, thanks for coming on, Andrew. I appreciate it. Having another discussion about kind of random stuff, and hopefully
That's
you
what
guys gain something from it. What?
I was gonna say. That's what we used to do all the time.
Yeah,
Every
I
lunch
know.
period, every lunch break. That's all we did.
Yeah, it's crazy. But yeah, that's all we've got, guys. And if you guys have any comments or anything, put it below. Put down Andrew is the man. If you made it to the end, Andrew is the man.
Merry Christmas,
Um,
everyone.
yeah, Merry Christmas. All right, guys. We'll catch you later. Ciao.